650 KTRS. Let's get straight to the world of real estate with our good friend Kathy Helbig from the Kathy Helbig Group. Good morning, Kathy.
Good morning.
You're coming in here doing a jig.
Yes, we have some good news. 2 bits of good news today. So I've been tracking inventory, as you know, every single week. And this week we finally have broken loose a little bit. We've got nearly 600 new listings that's hit the market in the last 7 days. Almost another 200 that are incoming soon. So that means in the next week to 2 weeks, those should be hitting the market too. We were tracking at about 380, 360, 380 this whole season, this whole first quarter. So to have almost 600 is
Are they coming in certain areas, different areas, more areas?
No, mixed up all over the place.
Mixed up all over.
Yeah, that's typical of inventory. But, you know, it's just to give you an idea, we're used to seeing this time of year anywhere from like 1,300 to 1,700.
So before the pandemic, 13 to 1,700, and you're doing a jig for 600.
Yes, exactly. So, woo.
Wow.
Yes. And then the other piece of good news that came out, I know there was so much confusion last week about the announcement of the fees, the loan level. It's called the loan level price adjustments.
Right.
And that was the story where people with good credit were going to get less of a good deal on their rates.
They were going to raise the fees, raise the percentage of the fees on the people with the good credit to help with the people with the...
Technically not give them as good of a deal. They used to get a break, a loan level adjustment, for having good credit, so their break was less.
Right.
And then the people that had the low credit, they were not getting penalized as much.
Right.
So they were trying to kind of balance out those adjustments a little bit.
Yeah.
Caused a huge ruckus, huge uproar, a lot of backlash. So the Federal Housing Finance Agency canceled the loan level price adjustments based on the borrower's debt-to-income ratio. So credit score is still out there right now. They did push back. It was supposed to start May 1st. I think it's now August something. But based on debt-to-income, which was a big deal because your debt-to-income can change almost daily.
Right, yeah.
You know? So they figured that was too much to try to calculate. It changes too often.
So they're still going to implement the rule, but have different criteria for it?
Yes.
Yeah.
Yes. Not based on credit now, and down payment. Credit and down payment, not based on your debt-to-income ratio. But we might see that, you know, there's so much backlash.
Right.
They already pushed back when they were going to start it.
Right.
So, you know, I wouldn't be surprised if it
And
ends
I don't
up
know
on the
how much
chopping block.
I don't know how much that would affect people buying a house.
It really didn't. It was really more of a sensational headline. I think a lot of politics behind it as well.
Right, yeah.
Because what I did a calculation, and I'm going from memory, so it might not be perfect, but it was a $400,000 purchase. And I think what it was doing is it was adjusting the good borrower by roughly $750. He was going to pay in more fees, or she was going to pay in more fees, because they weren't getting quite as good of that discount for being such a buyer.
Right.
Versus the buyer would have had about a $3,700 difference for not being dinged as bad. But that's not necessarily going to help their monthly payment very much.
Right.
So it really wasn't doing a whole lot other than those upfront fees.
It's a great point. They were trying from what I understood, it was they were trying to get more people to qualify for homes, which is a good thing.
Right.
But you needed to sort of cover some of those costs.
Correct.
And so
we didn't see the phone pickup.
Right. It wasn't like people.
We can
I've
finally
got terrible
do it,
credit, now I can buy a house.
Exactly.
Yeah.
Exactly. And then the other thing too is if you're not putting down 20%, because people were like, well, maybe we shouldn't put down as much. Like, that was the argument. Well, if we shouldn't put down as much then, and because we have good credit, we're not getting a break. Well, then you have PMI come into it.
Right.
So it was just really complicated. It sounded good for we were going to do something for the home buyers, but it really didn't equate to much that I've seen yet.
I still think that there is a documentary on PMI because that money goes down a rabbit hole, never to be seen again.
Yep.
It is just a...
Well, especially when there's not a rash of foreclosures. So that's
and when there were a rash of foreclosures, the banks had to be bailed out.
Right, exactly.
So why were they paying all this PMI
and for
insurance?
those that don't know what PMI is, PMI insurance is private mortgage insurance.
Right, yeah.
For people that put less than 20% down. So it's helping supposedly the bank that's insuring the loan, that if they do foreclose, they've got that extra money in their pockets somewhere.
No, it's a whole interesting thing.
Yes.
All right, so more inventory, which means
more inventory means
options,
that we're probably going to see some. It should help us in a bunch of ways because there's still people that are locked into I want to move, but there's nothing out there.
Right.
So if that person finds a house now with the new inventory that came on, then their house will come on the market. So we hope it's a little bit of a snowball effect.
Yeah, that makes sense. Yeah.
We still have some sellers that are holding on to their 3% rate and going, I ain't going anywhere.
Right.
So once the rates start to come down and they are seen again, when the Fed raised the rate last week by 0.25%, mortgage rates dipped down a little bit.
Yeah.
So don't always listen to that, you guys. So we're seeing, that rates come down a little, and then they're predicting they expect they will come down some more this year. So as we start to close that gap of like that 3% buyer that or person that refinanced their house down to 3%, we're not pushing that upper sevens anymore. So that was a bigger gap. So once we start seeing it come down closer to like 5s and 6s, it'll be more palatable for those people in the 3 to 4s to go, I don't love where I'm at, or I'm growing out of where I'm at, and I can stomach 5.5, 6.
Yeah, that's a good point.
From my 3.5.
On a side note, I saw a picture of your husband on Facebook.
Yes.
And I actually thought he was wearing a suit, a bodysuit. I was like, there's no way that guy is that big. He looks like a superhero.
He does look like a superhero.
Holy mackerel.
When you put a suit coat on him, sure.
He didn't have a shirt on, and I was convinced it was like one of those fake muscle suits.
Oh, wait, wait. It's almost lake season, so the no-shirt photos will be out. So don't you worry.
The man is a superhero. Kathy
he
Helbig.
Is made of steel.
314-276-SOLD. 314-276-SOLD or KathyHelbig-Group.com. Good stuff.
Thank you.